Hey everyone, me Kevin here. Many of you know that a few amazing course members and myself have been tracking housing sales data in our areas, and we've been using this to try to understand what's happening in the market throughout the United States before the mainstream media gets their information, which is usually delayed by 2 to 3 weeks. This kind of helps us understand the direction of the real estate market before the rest of the media does. And the interesting thing about this is so far we've been right. We mentioned in March and again in April and again in May that real estate was barely impacted so far by the pandemic. And now we're going to talk about future impacts and some conclusions because I'm sure there are going to be more impacts. We're going to talk about those. But this isn't to pat myself on the back. It's just to say, like, the data so far works. Well, we have new data, and I want to report that to you today. These are the numbers, being released today that are looking back at May. So we'll kind of get an idea as to what happened throughout the entire month of May, and then we'll compare that to what's happening in April and January, and then we'll talk some conclusions about what this means to you if you want to buy a house, if you want to sell a house, or whatever. So let's hop right into it. So here are the results of the data for April to May. We see prices across the board are down. All counties that we surveyed are down across the board. We have properties taking longer to sell, and we have less properties selling. That's with the exception of Tampa and Miami, where we saw slight increases in pricing, but across the board, everything's taking longer to sell, and properties are selling for less money. Now remember, this is data from May 1 to June 1, so it represents May closings. And these are deals that would usually go into escrow between the end of March and end of April, which is really the height of the coronavirus pandemic's impact on real estate, at least during phase 1. Phase 1 is kind of what's happening now during the pandemic, during lockdown, during reopening. Phase 2 is going to be what happens when forbearance ends. We'll talk about that in a moment. And so we see prices are down on a month-to-month basis, again, across the board, volumes down across the board, and the time it took properties to sell was substantially up in May from April, even though we started to open up the economy more. Now, here's what happened when we compared May's data to January's data. We see that in the pricier areas, like Southern California, pricing declined and volume declined, but properties sold a lot faster in May than they did before the pandemic. Throughout the rest of the country, including Hennepin, which is the county where George Floyd died in, we had been tracking data there before the incident. It's just interesting that we have data from that county in this experiment here. But what we see is everywhere else, pricing's actually gone up. We've got some mixed readings on volume, and then we have properties across the board selling faster. Now remember, you can look at this spreadsheet yourself and make your own conclusions as well. It's totally free. If you join the Discord in the link down below, up in the news and announcements section, if you scroll up, you'll see a link to this spreadsheet. Now, all of these regions had faster sales in May than in January, which is really good. That means properties are moving faster now than they did in January. They're just not moving as fast as they did during the pandemic, which is weird. So properties sold normally fast for January, which isn't very fast. Then they sold faster during the pandemic, and now they're kind of going back to this normal spring selling time, which is kind of weird that properties were selling faster in the pandemic. But let's go ahead now and draw some conclusions about what this means for the current state of, housing markets and the future. But first, remember to get your life insurance and 2 free stocks. The link's down below, right where the link is to Discord and my awesome programs. Remember, Discord is free. Programs, you can join me and have private live streams and get all the recorded lectures. Really fun. And when you sign up for Webull, you need to deposit $100 so you get 2 free stocks. All right, so here are the 2 parts. We've got the current future of the housing market, and then we've got the future after forbearance. So for the current future, it really looks like the worst may be behind us, that the May data may be the worst, because the May data is really representative of peak fear, we'll call it, which the June data should be representative of opening up. That is, sales between June 1 and June 30, which we'll analyze at the beginning of July, should show us more enthusiasm again. Rates are low, more properties on the market. Hopefully properties are selling fast, but the big thing that we want to see is much more selling. More selling will really give us a better idea of the direction of prices. And if prices stay stable, which so far it looks like they're staying stable, then real estate really weathered this very well. It's probably because of all the forbearance plans that happened, which we'll talk about in a moment. So remember, rates are still very low, the housing market's starting to open up, and inventory is hitting the market more and more every day. So really, we saw a worst decline in high-priced areas like Southern California between 1.3 to 2.4%. My guess is that areas like Seattle and New York, which were hit substantially harder, although Southern California was hit as well with the Rona, it's quite possible that those areas saw larger declines for the year so far. I wouldn't be surprised if Seattle and New York had declines in the neighborhood of maybe 4 to 5%, but we're certainly not seeing declines from January to today in excess of that. It's not like what we saw in the stock market where prices fell 40 to 60%, in some cases 70%. I mean, that was peak fear. Anyway, moving on, it looks like real estate's fared overall pretty well so far, and expectations are very positive going forward. So now the big question is, the immediate future looks okay, but what about the long-term future? Are we going to see that massive wave of foreclosures when people don't end up getting their jobs back, or they don't make as much money as they did before, and when forbearance ends? Well, so far, it's important to know that Fannie and Freddie are issuing guidance pushing back the payback terms of the payments that you didn't make to the end of loan terms. So this is really good for a lot of people because it means a lot of people are not gonna have that sudden, all right, you owe everything, you took 3 months off, well now you owe 4 months. That was really bad when that was a possibility, so that's good. We're also seeing that any of the credit impact to people who took forbearance is actually pretty minor. That is, so far it looks like people who took forbearance had maybe a credit hit of somewhere between 30 to 40 points, but after a few months, that credit hit almost entirely disappeared, especially if they started remaking their payments. That's really good. It's a temporary hit. Again, something else that solidifies real estate. Now, remember, about 93% of Americans have more than 5% equity in their homes. That means we really have to see prices in real estate fall by about 15%, and then we're gonna start affecting more homeowners. If prices fall 15%, you could have somewhere around 20% of homeowners underwater. But even at that point, you have to ask yourself, how many of that 20% of homeowners are going to determine that, you know what, prices fell, we're a little bit underwater, let's now do a short sale and foreclosure, which is going to hurt their credit, their ability to rent places in the future, and it's going to cause other damage. I don't know if we're definitely going to see a massive foreclosure crisis, especially with so many liberal terms in favor of consumers, the homeowners, who are able to do loan modifications if they need to, if their income went down. I think there are going to be so many options available that I just don't see a crash happening in real estate, but we're gonna stay tuned with the data because you can always be wrong. This is just what the data is showing right now and kind of what everything's pointing to. So should you buy real estate or should you sell right now? Well, if you definitely need to sell, which I usually discourage because you have to pay fees and taxes, and well, realtors are expensive, and I'm a realtor saying that, I don't know. Sorry if you're a realtor watching this, it's just how I feel. If you have to sell, yeah, I don't see anything wrong with taking advantage of the comps where they are now. I think now might be a good opportunity to do that. You've got the summer months, you've got some people not back to work yet. This is a perfect opportunity for people to go shopping, especially if they're going to be back to work soon to where they could still qualify and buy. If you are thinking about buying, I'm all for that as long as you get a good deal. I feel like I sound like a broken record, but as long as you buy real estate below market value, I'm super fine with you buying right now. If you get a cosmetic wedge or a rent wedge or an over-improved or whatever, any of the different kind of wedges that we talk about on this channel and the course link down below all the time, then go for it. But if you're going to speculate, now's probably not the time to do it in terms of your own home. If you're gonna buy a flip, I'm okay with that. Flips, now it's okay. Now might be an okay time to get back into flipping with rates as low as they are, taking advantage of that before they go up again. They probably got a year's time to do that. But as in terms of actually like building a spec house or some kind of new construction for you to move into and you want to make your dream home, I think your money is deployed in better ways right now. I think there are plenty of opportunities still to be had in either the stock market or the real estate market. So I probably wouldn't highly encourage spending money on that right now. The bigger issue, in my opinion, has to do with tenants who didn't pay rent. How are tenants who didn't pay rent going to catch up on rent payments? I think that's going to lead to massive lawsuits, massive evictions, and ultimately is going to leave a lot of tenants very poorly qualified in the future to go from being a renter to being a homeowner. Because if a tenant gets sued and then they get evicted and their credit tanks, well, now that person becomes a lot less likely to buy in the future because they just got screwed for being a tenant. So here we go again in America. People who own assets got bailed out. People who had houses got bailed out and their contracts got modified. But tenants, got, well, the short end of the stick again. It's just the classic way America seems to work. This is why I pitch so much that you need to get started understanding money, investing in stocks, investing in real estate to get ahead in this country. That's why I have courses dedicated to exactly those two things. Now, we're gonna see what happens with that, but that is our update for today. So make sure you get your life insurance, your 2 free stocks with Webull. Check out those programs down below. And folks, if you have questions and comments, let me know what you think in the comments down below. Do you think a massive crash is coming? I want to hear from you, but I also want to hear why. Why do you think? Because look, I am not a god or some wizard with a crystal ball. I could totally be wrong. I just want to see the data so that I can address it in a future video, which I think y'all know me. I'm very willing to make an update video and say, uh-oh, here's a problem. All right, thanks so much for watching, folks. We'll see you next time.